Hi there. We're going to look at three research and governance L1s in this video, including Cardano, Polkadot, and Algorand. For new joiners, I'll cover Wyckoff stage, potential price trend change, as well as key price levels. These are education content only, not financial advice. And in order to help you avoid FOMO and panic, I've launched the Substack dashboards, including a macro dashboard as well as a crypto market dashboard. It's available at Asset Lens on Substack for free at the moment. Go check it out. Here, for Cardano, it is basically approaching or getting deeper into the accumulation cycle, which it is likely going through the panic over stage. We see sustained low volume, okay, compared to the 2022 accumulation cycle. We see from the initial drop, the volume continues to get lower, lower, and lower, okay, until the point the sign of strength came back. This is what we're waiting for in the accumulation cycle, okay? While there may still be downside, while the whales are testing the paper hands, trying to shake them out as much as possible, the idea is to see whether sustained volume comes back to challenge a previous trading range top. In the case of 2023, it was somewhere around the green key level of 40 cents, 660. Okay? You see the sign of strength pop up to challenge the green line, went past it for a week, and then drop back to that particular line for another round of tests before the whales let the price shot up, okay? And then came back down for a quick accumulation second round to the next distribution cycle, okay? So, back to where we are now, we see that for Cardano, it is still trading kind of sideways, but with lower lows. So let's get to the daily chart and see where it is heading while we are trying to see the confirmation come. Currently, the price is slightly lower than this yellow intermediate level of 24 cents 50. I shared before that if we look at what happened on the 6th of February, the price came down to challenge the blue key level of 22 cents 30. And that's a possibility for the situation we are in now, even though it has been trading sideways since the beginning of Feb, or even earlier, right after 31st of January, okay? The reason is that given the macro environment, it is just kind of like a risk-off mode for most people and, capital preservation for most people. So that's a good environment for whales to check out more paper hands. If we look at this over here, this was the October 10th tariff announcement date last year. The price is well below that point. And why is that the blue line gave so strong support on the February 6th? It's because the 2023 cycle, that's exactly the same level that the price tested and then quickly reclimbed to above the purple key level of 25 cents 80. Right? If it is really coming down to test this blue line again, and with very strong bulls coming in, pushing the price back to at least above this yellow dash line, that's the second time the whales find that, okay, this is probably where Cardano is going to end up at, because every time we push the price to that level, some people would come in strongly, irrespective of the environment, how bad it is. As bad as the news are right now, we tested it, and the strong buy still comes back. Then that's a sign to them that, okay, this is probably how deep it can go, even for this cycle. And the yellow dashed line over here is also a good reference because there were 2 rounds of tests ending up around this level. So these 2 lines are key for the coming weeks, with the economic data coming in gradually before the final month of Jerome Powell. Okay, so if you say, is it actually turning from a sideways to a downtrend, given what's happening since the 18th, we can track that as well. You can draw a channel box right here. You see basically the ceiling and the bottom, you can say, is the resistance and support of the channel. We've got 2 reference points over here. We've got another 2 over here. So assuming that's the case, it is going down and it finds support along the blue line, comes back up again. How to confirm that the downtrend is over, or like it's only a sideways, like we think it is more likely the case. Okay, this very positive case. In the next few days, the price already climbed back to shoot above the purple key level. That's the 1st of April. All right, just 2 to 3 days, depending on where you are around the globe. Next is the yellow dashed line. That's the April 6th. And eventually, the blue line, April 14th. All right, we've got 3 opportunities in 2 weeks' time, from April 1st all the way to April 14th, for the bulls and bears that are fighting along this triangle to confirm, okay, is it still a sideways trend or are we trending downwards? All right, so that's something interesting to observe how it develops. Next, Polkadot. So for Polkadot, there's a box over here, but when we get to the daily chart, we'll talk about it. Basically, you already see the candle has dropped outside of the support. So the key thing here is, after 5 weeks ago, that crazy trading period, it is still returning to a more quiet period. The volume has been staying low. It is still the testing of paper hands, diamond hands, with the price staying slightly above the red key level of 97 cents, where the October 10th, 2025 tariff announcement day tested. Okay, nowhere in the history since 2020 has the price of Polkadot came to that level. Of course, in the very early days, there may be an occasion where you see Polkadot got to that low. Let's check. Okay, that's exactly right before the August to mid-August 2020. That was very close, but not as deep as the red line. Okay, so here, same thing. We are aiming to see the sign of strength coming back, meaning sustained volume coming back to re-challenge the orange T level of $5.15. That's where the May 2025, we're getting into a 1-year mark now, has shown us. All right. And there were multiple tests afterwards towards the red line trying to reach the orange as well. So somewhere between the red and orange, if sustained higher than average volume compared to recent periods comes in, that's an indication that money is starting to come back. Just that the caveat is that, after sign of strength, there are usually retracement, either shallow or deep. It doesn't matter. That's the way early profit taking or the whales trying to push out the last bit of paper hands before you've got sufficient engine boost to launch to the next formal high. Okay, if good news are lining up longer, that's where that is going to sustain. But if good news aren't there, that's where it ends. That's only 5 weeks over here before the price dropped. Okay, so again, be cautious. Even if you're happy about price surge, don't leave it open without protection. Always learn the good practice to take the profit along the way and set a stop loss. Okay, everybody has a different preference, how much profit they're taking, where do they set their stop loss. There's no one-size-fits-all answer. So back to here, this is the box we see in the weekly chart, and it shouldn't be there. But it's fine, because we were trying to measure if the trend really turns to an uptrend because of this, and this when we did our last session. But unfortunately, exactly right at near the point of this cross. That's why you always look at where the support or resistance, meaning the boundary of those channels, crosses these kind of levels. Okay, right before that the confirmation came in, it is essentially still within the sideways trend that we have already marked. Okay, this line over here at around $1.67 all the way to $1.23. Okay, it has been like that since, you can say, as soon as the beginning of February. Okay, range bound over here. Look at, right, if you exclude that white candle over there, it's like 11 days of downtrend. Okay, now that it has exited the uptrend, okay, we don't need that anymore. Just to keep it enough so we see this April 1st date. Okay, we see that triangle. It doesn't hold here, so it continues all the way to this line. Now, with this very narrow downtrend, if it doesn't hold, okay, supposedly with the volume coming back to this level, maybe people are guessing the numbers coming out from the US aren't going to be good. That's why they have been pushing the price down. Okay, but that's only their guess, okay? It doesn't mean the numbers are necessarily really bad. One thing we can gauge, similar to the previous sessions, if we are going through this very narrow channel, okay? Very, very narrow. Let's adjust a little. Yeah, so it captures all the candles nicely. Okay, just giving it a little bit of breathing room so you can see it clearly, because if I shrink it too much, it's like lumping everything together. It doesn't look good. We've got another date. Okay, same thing. 1st of April or 31st of March, right over there. Okay, within those 2 days. We're getting very close. You see the bulls and bears are basically gapping the price over here. And by tomorrow or the day after, it's reaching this edge of the triangle. So either one of the two things can come in. Confirming the sideways trend continues by breaking the ceiling of this downtrend. It hasn't done it for how many days now? 12 days, okay? For 12 days, it has been within this medium or short-term downtrend. If it doesn't break out by the April 1st, it has to break the support and come down to test the lower levels. Okay, that's what it did in the beginning of Feb on the 6th. All right. It all depends on the US numbers coming out. Those are good reasons. Those may not be the cause, but are good reasons for the whales to sell to the public, not selling this dot selling to the public. So they sell and the whales silently get in. Okay, so remember this, October 10th, red key level 97 cents. It is heading towards that direction, but it doesn't mean it is going to break the yellow dash line. The key is the next 2 days. If it breaks, then this is the strongest support that we are observing for Polkadot. Next, Algorand. Algorand here, similar thing, but even worse because it has basically dropped below this red key level of 0.087. That's the lowest point during the 2023 accumulation. And it is basically trading around that line. Okay, you can say it's around, even though the price is staying below for a few weeks. Okay, so it was below during end of Feb, the first week of March, and now we're back to that level. We just don't want to see it go even deeper. It is actually edging lower than where we were at in the beginning of Feb. So this test is indeed very deep, shaking out a lot of paper hands. And we need to see signs to come back to the sign of strength like what it did back in July last year. Yes, it was quite a while ago. So without repeating what we are hoping to see or waiting to see the increased volume coming back, re-challenging this blue line of 24 cents. Let's go to the daily. Okay, sideways trend, very similar across a lot of crypto. Remember that bright red candle pushing the price down in the beginning of Feb, and then a very strong bullish support pushing the price back up to a previous support level, and eventually bouncing around sideways, pretty much. And now, looking at this, today the price dropped slightly lower than the yellow dash line. This level was set by the 6th of February, just less than 2 months ago. It seems like the bulls and the bears are battling around this line again, exploring whether they can go even lower. So, same thing we can do. Today, given the breakout happened, the price come back down, range bound. But if it is not range bound anymore, if it is a downtrend, triggered by the war or whatever, the prolonged war, from the expectation of a very short, brief attack to a prolonged war with oil price coming up, gold and silver fluctuating. If a new downtrend is brewing, okay, assuming we have this new hypothesis that a new downtrend is going on, look at this slope. It's very similar, like almost parallel to the previous bigger downtrend. Okay, if I shrink it just to make sure, it is like sometimes you can swing the box up the previous channel, just that it engulfs the current trend. Okay, but a lot of these are not aligning to the ceiling, so that's why I haven't done it. But instead keeping it like this. So if a new downtrend is really developing, here is pointing to a date of 4th of April. All right, that's when we get our first opportunity to see whether the bulls and bears are really letting the price develop a new downtrend. It can drop sooner than that. Basically, it's just in a few days. So anytime from then till the 4th, it can drop through the yellow dash line. And that's a new exploration to all-time low, a new all-time low. Okay, however, if it stays above the yellow line like what it is doing currently, there's still about 7 hours left to today's candle, it is going to trade towards the tip of this triangle. And that's when it is going to confirm. Once again, is a sideways trend continue? If there's no surprise in the market, it should be. If it is surprisingly good news from the US economic data, then it can go up to challenge the red key level or even the orange key level of 0.095. But if the numbers come out really bad and the war in the Middle East continues, and who knows what's going to happen with the Ukraine war, a lot of these moving parts, plus new possibilities of like inflation or recession, that's going to drive that kind of sentiments, leading to the downtrend continuing, okay? Rejecting by the ceiling and then comes to explore lower low. That's the risky situation that, broad crypto market is facing. But in this chart of Algorand, it shows us that there's a possibility over here, and we'll get the confirmation in the next few days. All right, if you're interested in accessing these sessions 2 days earlier, like the other members, join them now. And remember, the dashboard that helps you avoid FOMO and panic by understanding the markets better is available on Substack at SLX. Thanks for joining. See you in the next video.